All right, so we're going to go over the key levels today. We're going to go over what the key levels are, the psychological numbers going around the key levels, time frames. Um, we're going to plan trades around the levels, and I'm going to show you what to do once you see key levels, where to look in order to confirm to see if this is a strong one or a weak one. Whether it's worth using or better to ignore and just keep an eye on it versus setting up a whole analysis around a key level that's in front of you just because it's in front of you. All right. All right. So the first thing we're always going to do when we start setting our key levels is we're going to go ahead and go to this right here. Usually your chart looks just like this, like the candlestick chart that everybody knows. What you want to do is you want to go head up here to the bar style menu, the drop down menu, and you're going to select line chart. I recommend you star it so it becomes a favorite and it stays right here so that you could come to it at any time. We're going to select the line chart. The thing about the key levels is it is subjective to the trader. It all depends on who's looking at it and how much the experience that they have at setting key levels. That will depend on how good those key levels are as well. Because if you're not used to looking at market structure and knowing what highs and lows are, or lows and highs, or breaks of structure, you're not going to know how to set your key level properly. So I'm going to teach you the easy way on how to look at it so you can make less mistakes and make more money. Get it? So obviously, well, not obviously, but some people do know, it's all about time frame analysis. When it comes to the market and plotting your key levels, I do top-down analysis. It starts from the top, monthly, weekly, daily, 4 hour, 1 hour, and you could place 30-minute if you want, but that may make your chart a little bit too messy. So you want a clean chart. So just stick to your monthly, your weekly, your daily, your 4 hour, and your 1 hour. And we're going to go over that here. So the first thing you want to do is grab your horizontal line. I got my little toolbox right here. So I'm going to grab a horizontal line, click it, and we're just going to go to the first peak that we see. We're going to make sure we place a line on there. Whenever you place your lines for that specific time frame, the main thing that you want to do is always make sure that you label that line. You want to label that line to the time frame that you found that area of interest in. So for instance, we're in the monthly chart. I'm going to go and label this one monthly. Simple as that. And you can see right here that it says monthly on here. If you want to know how to do that, just double click any horizontal line that you place, go to text, type in monthly right here in the box, and then you're going to go to template and save as, and then you're going to save it as a monthly key level. And you're going to do that for each time frame so that you're ready to go. And all you have to do is click a drop-down menu and highlight a monthly or daily or weekly key level. All right. So I found one key level there on the monthly. I found another one here, which is iffy. This would be, you could use something like this, but this is something that you'd probably see more prominent on the weekly, like that. So it's better we just stay on the monthly and keep this out of the way because the weekly is going to cover this area of interest right here. So we're going to grab another monthly. And you can see that there's not much to work with when you're on a monthly key chart, when you're on a monthly line chart. But once we start going down to the lower time frames, market structure starts forming more and gives you more areas to work with. That one's interesting. We could go down here. And as I go along with this, if you have questions or you need me to back up on anything, just stop me and ask the question. We'll take care of it right there. So for the lesson, we're just going to keep our eyes on this area. Otherwise, we'll be here for a long time doing all of this action down here. But we're going to give you the basics right now so that it's what we focus on. So we've got our monthly key levels plotted. Now, the next thing we're going to do is we're going to go down to the weekly. And in the weekly, you see a lot more action, right? One of the things that's crucial about looking for key levels is finding areas of support and resistance that interact within the chart, meaning areas like this. Like, let's say we like this key level right here, right? And we label it the weekly. If you look, after you placed the key level on this point here, if you look to your left, you'll notice that not only was it a point of resistance, but it's also a point of support. You guys see that? This right here is a very strong indication that price is going to react in some form once it comes back here. So that's very important to take note of when you see areas like this. You're not going to see them everywhere, especially on the higher time frames. You'll see action like this more so on the 4-hour and the 1-hour time frames. But when you find them on the weekly, it's very important that you guys highlight those key levels right there, because that right there in the future, we're either going to be buying, selling, or taking profit from this area right here for some reason. If all the other confluences line up, we're going to use 4730 as an area of some sort of action when price gets there. That's almost a guarantee. So if we look, we find another one right below. Just like that. Boom. We got a key level here that was used as support, and it was also used as resistance. You'll see peaks like this, and that's okay, because it's not always going to be perfect where a point to a point is going to touch. Sometimes it's going to be a point and a whole sphere that's going to pierce through it and then come back down. If you want to see what that looks like on the candle chart, that's what it looks like. It's regardless, it's still an area of interest, because look what price is doing when it got to it again. It starts rejecting in that weekly key level. That's how these key levels work. They're going to be highlighting for you areas where price is going to be giving you some type of action, whether it's a rejection or a price for you to enter on, or price for you to be placing your stop loss above or below that specific key level so that you can stay in the action. So let's move down and see if we can find another one. Does anybody have any questions so far about that? Anybody? Good? Good. All right, so let's go here, place another key level right there. And we can place another key level over here. If you notice, I'm not paying attention to the moves in the middle. The reason I'm not paying attention to these moves in the middle, and I rather pay attention to the highs and the lows, is because this is the actual action that I'm looking for when I want to place key levels. All of this stuff in between here, we can spot that on the lower time frames, like the 4-hour or the 1-hour. I'm sure something will be prominent here, and we can check it right now just to see, just to make a point and see what actually that looks like on a lower time frame. And that is what it looks like on a lower time frame. See all of that action right here? There's going to be 2 or 3 key levels in the 1-hour and the 4-hour that are going to be placed within this here. All right, so let's go back to the weekly. Get back over here. All right, so we're within here. All right, so we have our monthly key levels, and our weekly key levels. I like this. Let me see here. Okay, no, it wasn't even on the monthly. You see how on the monthly key level, there's nothing there for you to look at. You're not going to see it there. But as soon as we go to the weekly, look at the action. It was right there where we didn't see a thing. So this is the same type of thing that's going to happen on the lower time frame and the lower time frame after that. It's just going to keep being more and more levels for you to focus on. So that's why it's also important to keep your chart clean. You don't want to clutter it with too many levels because it's going to cause overthinking and you're going to have too many decisions that are wrong versus focusing on the most important key levels for you to have the ability to profit off of. All right, so we're done with the weekly there. I'll save that right there. And I'm going to move down to the daily key level time frame. Notice I'm doing top-down analysis. We started at the monthly, then we went to the weekly, then we went to the daily. So now we're in the daily time frame. All right, and we're going to pick off a few levels off of the daily time frame. The first thing that sticks out to me, because my eyes experience and I've seen much of this before, is this area right here. This level right here, boom. Why do you guys think that this area is important to me? Any answer?
Resistance and supply.
Support, supply, demand.
Mm-hmm.
Either terminology. So we've got, like Carlos says, we've got resistance and we've got support in the same key level. So you want to highlight that because why? It's a very strong indication that price has the highest probability to give some form of reaction once it gets there. So we pay attention to things like that. All right. You want to train your eyes to look like you want to train your eyes to somehow get rid of all of the noise that's in here and just look at the market in not waves, but in legs when you're looking for key levels. So like this is a leg. 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 And so is this. Look at all of the noise that's all in between the legs. But in reality, all we have is this. When you train your eye to look at the chart like that, it simplifies it for your mind and you can make decisions faster. All right. So let's see if we find some more key levels on the daily. Once I turn this chart into back into the candlesticks, it's going to look like a clean roadmap for you to start looking for setups in between these key levels and through them as well. So let's see what we find down here. Nothing there. That one's already covered by the weekly. You never want to do something like this. This is a good example here. You never want to see this peak right here, right? And it's so close to the monthly. Levels that are close together, you don't need to use them you don't need to place your key levels like that because ultimately these key levels are actually zones. I might be placing them as lines and that they might be showing you a fixed number, but you have to look at it as a zone like this. Like this is a zone, right? So since the weekly's here, which is way stronger than the daily ever would be, I wouldn't place a daily key level so close to a monthly. What I do is I'd keep my chart clean and I just wouldn't use it. When you're first starting out, you're going to do a lot of that and that's perfectly fine. But I'm just telling you, don't have lines so close together. You want them spaced out as evenly as possible. It's not going to be perfect. Sometimes it'll be in the 50% in between two lines. Sometimes it'll be like a quarter of the way. Like this right here is calling my eye to place a key level here. Right here. And why do you think that is, guys?
You have multiple touches.
We got multiple touches. Not only that, What kind of
Support and resistance.
support and resistance? We've got a clean resistance here and a strong support over here. And not only that, it keeps the space here nice and even, or even-ish, but clean. You want to keep your chart clean because you have to be able to see past your lines to look at the market properly, right? And this lesson is very easy. It's boring, but it's where the money's at. So it's the most important. These key levels are the building blocks to profit, straight up. There's no discussion about that. Not in my opinion. These levels are where I've made the bulk of my profits because I've gotten really good at placing key levels. And because of that, I'm able to take advantage of the market in ways other traders don't even know exist or just care to it or just ignore it. They don't pay attention to it enough. But if they actually understood the power in placing key levels and having your chart plotted and ready for you to wake up in the morning and make a decision in 15 minutes to enter a trade and make money in 30 minutes to 3 hours and go on with the rest of your day, then trust me, a lot more traders will be paying attention to the building blocks. And this is where it's at. This is the fundamentals and the basis of my strategy. That's how simple it is. All you have to do is get good at placing these key levels and making sure that you're labeling them. Why is it important that you guys think it's so important to label where I found these key levels at? When price gets there, why do you guys think that's so important?
Certain levels are stronger than others. The higher time frames are stronger.
I couldn't hear you. What'd you say?
Yeah, the higher time frame key levels are just stronger.
Right.
More respected.
It's about strength. And so what about that strength you think that's so important about it?
We're likely to get strong support or strong rejection from it.
Correct.
Probability wise.
Correct. If you have, like, because you know the strategy, if I have a fib placed on a setup and there's a 618 and there's a break of structure on that 618 and there's an order block on that 618 and then I find a daily key level on that same entry level at the 618, what do you guys think I'm going to do with my risk when
increase the risk?
You go bet the farm.
It's what gives me the confidence to make a decision that day on whether I want to go light into the market or go heavy and make a nice bag, because not every setup is worth going heavy on. If you guys notice in the chat, I'm always like, go light on this one, guys. I don't trust it too much. It's because I'm making decisions based off of what I've plotted weeks before. Like once you set these key levels, you don't have to touch them again for a while. You don't have to touch them for unless the market is going into new all-time highs or new all-time lows, then you adjust those and create the new ones. But after you set these, you can use these key levels for months. And also take notes that while the market is going on, if you've noticed that a key level isn't really being respected, just delete that key level and look for a better area to place that same key level of that time frame. You guys understand?
Yeah, makes sense.
Because sometimes you'll leave a key level. I've done it all the time where I've left a useless key level there, and for some unknown reason, I just haven't deleted it, but it's still coming up. I got a daily that I haven't used in 3 months. And I'm like, I don't know why I haven't deleted it yet, but I should get rid of this shit right now. It's best to just be very organized and clean, but everybody has their own style, All right, so let's look for, anybody have any questions so far? Everything's clear?
Good? Would you put one just above there? There's one in the middle of the last two lines you have.
Down here?
No, above.
Oh, above?
Right there, in that area.
In this area?
Yeah, right there. Is there another support and resistance area there?
Great eye. That's exactly where I would place a key level. Bing. You know what's going to happen when price gets there? Do you have any idea? Like, look at this. Look at what the market did when it got there. When it first used this key level. Boom, rejected. Nice. Then it finally broke. Then when it got there, the exact zone right
Retest.
here. Prang. And then it came back down and finally. When you see this, there's a very high probability that when price gets here again, when price ever gets here to this key level right here again, that we may see a rejection. So, like for me, like if I'm looking for shorts and I don't see anything anywhere where I could place shorts at, if I see my key level here and I don't see anything but my key level here, because that's how it's going to be on your charts. You're not going to see anything back here because you don't need to. Because why? Because the key levels project into the future for you to make the decision that was already made in the past. You no longer need to keep going into the history. You've already done the work. You get what I'm saying? Doing all of this work up front creates faster decision and more confident decision making in the future. Make sense?
Yes.
Yeah.
So when price gets here, I'm gonna look for a short of some kind. Or this, if I'm going long, I would exit right here. No ifs, ands, or buts about it. That is a daily key level. I'm taking my profits right here, guys. You know what I mean? Like, especially if I'm swinging it from all the way down here, I'm taking it right here. Fuck everything else. But that's what these key levels also represent. They represent exits, not just entries. They represent exits. Meaning, if I took an entry right here, as an example, and I don't know where I want to exit at, I can just use key levels as exit points. Straight up. And this works on the higher time frame and on the lower time frame. Like clockwork. The market is fractal. So whatever works on a higher time frame can work on a lower time frame if you're using and you're analyzing the market properly. All right, so let's see if we see any other key levels. Oh, we don't have to worry about down here. So from the daily time frame, which time frame do you guys think we go to next?
Dude.
H4 hour.
The 4 hour. We're going to go to the 4 hour time frame now. Now we're going to scrunch it up a bit and start looking for some action within this 4 hour. Look at that key level that Carlos pointed out. Look how many touches that key level has. This key level right here in the future is going to bring some action in some shape or form. I guarantee you we're going to use it. All right, so now that we're on the 4 hour, we've got two peaks here that we could block. We can mark off simply just because they're there. They don't represent anything except a high. So we want to mark the highs.
You want to label the high as well.
Correct. Well, we're going to label that as an H4 because we found it on the H4.
Correct.
And then like when you guys are doing analysis, you can go ahead and just make your own custom labels for what it is that you want to call it. People call it all-time highs. Some people just call it just highs. But since we're doing key levels, you always want to make sure you're labeling it what you found it as in that time frame. So those are two H4 key levels that we can use right there. Since there's nothing here, we want to come over here and look and see if we find anything of interest that's worth blocking off. It's like you can use something like this. When you can't see things, right? Every time you select the line, you'll see a bubble right here, a little dot pop up. You want to grab the dot because grabbing the dot is what's going to help it snap to place. snap to place, snap to place. You know what I'm saying? Like, I'm going to use this key level right here because it has so many touches. I can't ignore it.
Yeah.
We've got 1, 2, 3, 4. You know, that's just so many touches. I could have easily just placed it here. You know,
There's only two.
then there's only 2. But if we go to the candlestick chart, we can see a lot more information, a lot more data. So we've got wicks, 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 wicks. And if we placed it over here, you want to dance with it, guys. You want to dance with it and see what makes more sense. And to me,
the first one
makes more sense. You set up, you've been doing some things over there. You've been figuring it out, ain't you? So that's a good spot to place a 4-hour key level right there. You're gonna, like I said before, placing key levels is objective to the trader. It's what you see. So the better you get at seeing, the better your key levels are going to be, and the more profitable you'll be. You get what I mean? So it's okay to make mistakes. When you're first starting off, your chart's going to look like shit. That's okay. Fuck it up. Because from fucking up, you're going to learn out what doesn't work. And the best part about knowing what doesn't work is now you know what doesn't work. So the only thing you get to figure out is what actually works now. Oh, maybe I should have chose this point instead. Yeah, that one looks better. Now it makes sense. And then it ends up working in one of your setups. There's nothing better than plotting your chart one night, waking up the next morning, setting up, finding a setup, taking it and working out. Nothing feels better as a trader than that. Especially because you're printing money out of the market. You're robbing these banks, and they don't like us. Well, they kind of like us because there's a great majority of us that are, what's the word I'm looking for? Ignorant to the information and the data that's really out there in this market. And a lot of people like to make this market more complicated than it needs to be. When all you need to understand as a trader is that you don't know anything. If you can accept the fact that you don't know anything and just allow the market to tell you what to do, you're going to be a more profitable trader than all of your other peers or anybody else you find out. And they're going to be wondering, how come your setups are so smooth? How come you're so consistent in making these profits? It's because you did the work in the back end. It's because you use the fundamentals of trading. It's because you understand market structure. And it's because you don't decide what to do in the market. The market decides what you're going to do in the market. That's the most important part, and getting your mind around that aspect, dropping the ego and relinquishing control to what the market has for you that day. And the best way to do that is preparation. Preparation by setting up your key levels in advance. Don't set up your key levels that day. You're fucked. You're fucked for one main reason. You just went through all of this data processing where your mind just saw all of these levels and the market going up and down and looking at the chart up and down, up and down. By the time it goes down for you over here, you're still thinking about the last move you saw all the way over here without you even knowing it. When really you should be doing this weeks in advance or the night before. You wake up fresh and you see how the market reacted to the key levels you placed. Look how clean this looks, guys. Look, this ain't nothing but money sitting on this chart right now. You see this? I get excited when I see stuff like this because I'm just like, all right, it's time to pay some bills, baby. Like, we got some things to do. This gets me excited. And you need to be excited by seeing this because this is the potential. The potential lies within properly laying your key levels. Like, look right now. We've got possible situation here where if the market stops, you know, I'm going to fast forward a little bit. We could just place a Fibonacci right there. Right here. That's the high. That's not the high. This is the high. Let me see what the daily looks like. Since that is a daily key level. Oh, yeah, that's a daily. So look, we've got a situation right here where we've got a key level close to the 618. They're not always going to be perfect. And that's a great example of this. You're not going to see it perfectly, but all you have to do is look left from the key level that's in front of you. If you're looking for shorts on gold, just look left. Look, we got rejection here. We've got resistance here. Support, 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 support. So we have resistance here. So the next time price comes up here, what's the highest probability direction that the
true.
market is going to do?
Probably
Reject.
gonna yep,
It's going to reject, guys.
that's right. Yep.
It's like sometimes I make myself
It's just-
speechless because
Damn.
yes, it is just that simple. You just have to get your head around believing it. You have to believe that it actually works. Why? Because it does. I'm living proof that it works. I'm telling you guys, this shit works. This shit, there's no rocket science behind this. Just place a couple of lines, recognize the pattern, and understand that all you got to do is just have some balls. Have the courage to place the trade. You know what I mean? And if you're not ready for that, stay demo. Just place it just like this. When you're doing forward testing and analysis on live markets, you're just like, yo, I got a key level there, but I don't know if it's going to work. So don't pressure yourself into doing it because it's going to force you to close earlier than you should. Instead, use your short position tool, place a fake trade, use an area where you'd place a stop loss, use an area where you'd place a take profit anywhere along this, and just leave your short positioning tool. Go to sleep, ignore it for a few days, come back, see if it worked. Simple as that. And that's no pressure. Do that for a month. Tweak your results as you go, and you're going to see how fast you can improve just by playing and painting on the chart like this without ever dropping a dime into the market. But we're greedy bastards, so we want to put money in the market. I got to see it now. You get what I'm saying? But I recommend everybody do this when they're first starting off. A lot of you guys have more experience. But for those who don't, I recommend you paper trade like that. Any questions?
No.
No? All right. So we're in the 4 hour. We just found this in the 4 hour, right?
Yes.
Yeah, you got to change that. Boom. All right, so leave it like that. Okay. All right, so 4 hour there. Let's see if we see anything else.
There might be one right there. You could check if it's in the 1 hour instead.
Too close here, yeah. I don't see none that I like there because it's too noisy. You know what I mean? Like nothing clean. And it's okay if you don't find anything. Don't force a line. If your brain doesn't process to place a line, you don't like it, go to another time frame. So we're gonna go to what's the next time frame after 4 hour?
1 hour.
1 hour. Typically, 1 hour time frame is the last time frame I like to place key levels, mainly because I get to keep my chart clean. And anytime I'm using 30-minute time frames, key levels, it's because I'm working. Those are my working lines. And when I'm done for the day, sometimes I get rid of them. Sometimes I leave them on because they worked really well. But I don't go to the 30-minute time frame to place key levels at all. I like to 1 hour and up. So we've done the monthly, we've done the weekly, the 4 hour, and now we're on the 1 hour, and we're gonna look for action in the 1 hour. So let's look. Let's start up here. Let's start up here and see if we find anything that we like, guys. Anything that makes sense.
A nice sharp one on the left. How it rejected the top left. No, the other left. Keep going. Above that, right there. That's a nice sharp one. Rejected.
Sharp.
You can always click on the candlestick
you can,
and see if you see anything.
as far as a 1 hour time frame, you could use that to highlight.
Plus, there's nothing there, so you want to at least have.
There's nothing at all there. Like you wouldn't even know it's there if you didn't highlight it.
Mm-hmm.
You know what I'm saying? Like, let's see what it looks like on the candlestick. And that's a good high to highlight right there. When you're going into the future, like price almost got there. But when you're going into the future, there's nothing there. So you could get stuck.
There's a gap, but that got filled already on the left.
Yeah, that gap got filled. We ain't even worried about
Yeah.
that.
Mm-hmm.
There's nothing there. So let's go back to the line chart. Boom. There's that. We've got this peak right here that could be used because there's the thing is also, oops. When this thing snaps, it snaps, baby.
When it's not too clear, I believe you mentioned before, it is smart to like look at the candlestick one just to confirm, right? Your eye.
Yes, you can toggle back and forth, like if you're trying to see something.
Mm-hmm.
Like this is okay. It's not bad. It's kind of like this one that we highlighted earlier.
Yeah.
Kind of like that one, you know, in that sense. Plus, there's nothing else inside of this range between the H4 and the monthly. So it's good to have some kind of information in there to see highlighting what happened in the past. So we could leave that there for now. It's not the best, but again, it's objective. That's okay. We'll see when price gets there what happened, whether it did work or whether it didn't work. You get what I'm saying? But you don't want to focus too much on putting too many of these lines like that. These are secondary lines for you to have a note into the future, so you don't really got to look back, you know. And you'll know, like you'll see once you start doing this a lot, you'll start memorizing your own key levels. You're like, oh shit, okay, because that's 5303, right? So in the future, whenever a setup comes, you'll be like, oh, I remember 5303 wasn't too pretty, man. Let's see what happens. Let's see what price looks like when it gets there. And it may cause you to go light on risk. And that's important. Because you can
Is it also important, Jose, that the numbers, like the whole numbers, so like for 500 is a whole number. So it's like I forget the word they use, but when it gets to 500, people are like, okay, that's a whole number. Let's sell and take profits there. Or it's a support level. So at 500, it's going to go up, especially if you have key levels above it, like a support number, a whole number, 500, 100. 50, things like that. Do you look at things like that or no?
You do. They're called psychological levels. That's a good question. That's what they're called.
There you go.
That's what this is right here. Psychological levels. Big round numbers, like 15,000 on the NQ or 80 on oil, that attract large flows in the market. So when you do highlight a key level and it comes out to be like a 00 or like a nice round number, that's important. It's a psychological number in the market. Don't ask me why it is. It just is. People behave differently when they see whole numbers. And we make a lot of money because, we make a lot of money. So it's a really good question. It's an important question too. It really is a thing in the financial markets. Gold uses that a lot. With gold and 00s and whole numbers, I don't know why. She loves it. Gold definitely loves it. All right, so let's see if we can find something else. We've got these two daily key levels here and nothing in between. So let's see if we can find something to dissect here. Placing something here. We're just dancing. We're going to start at the right because that's the first peak I see. Doesn't mean we gotta stay there. Let me change this to an H1. Okay. It's definitely a level. Why? Because it was a resistance. It was actually strong. Price broke through it, then used it as resistance, and it fell and never came back. And in this case, price came down, and it was a strong rejection, and it took a while before it ever broke down. As a matter of fact, it went up and then came down. It had to collect more liquidity and then come down. So that is important to notate there. You can see it has a lot of touches. It's got a lot of touches. There's action in this level at 50.42. Price came up here, used it as resistance, rejected. Used it as support, used it as a weak resistance. Resistance here strong, broke here. We've got data. We've got some data. You know, like you want to think like a detective. That's what when you're placing key levels, you're acting as a detective. So you're gonna add and remove. I'm just placing this one here because I want to see because it's further.
Yeah, I like that
I want to see if that even makes sense. Like it was used as a support here. It was a weak support, and then it finally broke. Support, and it never came back. And then the rest is like, okay, let's see what the candlestick chart looks like. Let's see what happens if we remove this. I kind of like it. You see how I'm talking to myself? That's how you got to talk to yourself. Like, oh, I think I can make it work. I mean, like, it looked like it makes sense. She got to show me, though.
It looks like it consolidates every time it gets around that area, which is
yeah, good. It was difficult. It was very difficult for it to break. And then it finally broke, right?
Moves.
And yeah, and it never came back. It came up and it used it as support here. Boom, never came back. You know, another thing I like about this key level is that it evens out the space between these two daily key levels. There's something to look at here. And this is important to note right here. This was a very strong key level, 49.79. Right there, right there. Sure didn't do much over here in the past, but I kind of like it. What do you guys think?
I like it more than the other one that you first put.
You like this one?
Yeah, the one you have now. One, because of the consolidation. I used to think that was bad, but I actually noticed that that's where they're collecting everybody's money.
Yeah, it's not a bad thing.
Next big move.
It's not bad when it's not bad when you know what it is.
Yeah, and the direction it may be going.
When you see stuff like that, like let's say you saw consolidation started, right? And your key level is set, right?
Mm-hmm.
Your key level is set and consolidation is only like, stop moving. Your consolidation is like this. You only have this much to go with, right? Let's say all you saw when you woke up in the morning was just this right here. But because your key level is set, you know what the floor is.
The 1 hour. Once it breaks it, you want it to retest, and then you write that bitch down.
That's what you want. Sometimes it doesn't.
Doesn't. Mm-hmm.
But in situations like this, you can go check the 15-minute, see what happens there. See if you see any. Where'd it go? Oh, sorry.
You can always put the circle, right? And then notice where it is.
Yeah, I was looking for this box. So look over here. This is a very difficult one to catch.
It actually retested, no?
In order to catch this one, you would have to go down to the 5 minute.
Yeah.
Because look, we know what support is. And this is a great example of having your key levels set and what they're used for and how to use them and how to use them when you're analyzing the market and how to make a decision within the market as it's in front of you. Because if this was this morning and then we see this break of structure here, there's nothing you could do except go for a breakout trade, but we don't trade like that. So if you can't see nothing on a 15, then you have to go to a 5 minute, which is the lowest time frame.
It's hard to find things when you go to smaller frames. What do you usually do? Is that where you put that little yellow circle and it allows you?
Yeah, I always make sure I mark first. Make sure I mark first. So in this instance, how we would be using analysis would be like this. We see the break. Let's say this didn't even exist. Let's say it didn't even exist.
Pin bar and everything, it caught everybody right there. The pin bar above the 1 hour, it looked like it was going to go right back up on the 5 minute at least.
So let's say we were there to catch something, right? Mind you, this is a perfect example of the use of a key level on an active market. That's what this is. Right? This is so tricky too. Because it's like, what do I do? But with experience, you can take advantage of things like this. As long as you're flexible, you're flexible with your mindset, you can make decisions like this. So you could use this last high right here. You could go right here, right? That's a 618 on the key level, guys. I don't know if you guys can see that.
Yep, and there's a nice little order block, but it's only a 5 minute one.
It's an order block, but we're on the 5 minutes, so it is significant. You get what I'm saying? So for like a 5 minute order block like that, what I like to do is I like to highlight the entire wick to wick because they're so tiny. You need to grab some real estate. So now you have this situation, right? Where, all right, there's a setup here, and we broke support. So what if the market breaks structure down? What are we looking for?
A retest before writing it.
Yeah, but what kind of play are we looking for?
Put
shorts.
Shorts for sure.
What you said, a put?
Yeah.
I gotta turn my options brain up. So we're looking for a put right here, right? We could either use here. We could use right down there is the bottom of the order block, right? Boom. Or we could use the key level, or you could use the 618 area.
Which one would you be?
That's the next question I was going to ask you guys. What do you guys think would be the best level to use so that you catch the play? And
the first one closest to the move.
The bottom of the order block. That's how I would make my decision. Why? Because there's things in my way. I've got the bottom of the order block, right? Resistance. And I've got the H1 key level, resistance. It's a lower probability that price is going to have enough strength to reach the 618, which is behind both of those lines of defense. So that's where you have to remain adaptable and flexible when you're making your decisions like this, right?
And prepare mentally for the drawdown.
Prepare mentally for the drawdown, because you're on the first line. It could still want to creep up in here if it comes and gets us, right? So where do we place the stop loss?
The beginning of the order block.
the top of the order block. I would use, since there's a wick right here above the order block, I'm going to use that wick. You know why? Because I like being safe. I got enough pressure going into the market, putting my money down. I need some lines of defense. That's how I look at it. I look at it as lines of defense.
And if it cracks that, it's probably gonna go up anyways. That's
Yeah.
good.
You said what?
If it cracks that, it's gonna probably just keep.
And
going
if it
up
cracks
anyways.
that, like Fabrice said, if it does go all the way up there, it means it's invalid. You're wrong anyways.
Change your character.
And that's okay. You know what I mean? That's not necessarily a change of character. It's going in for a steeper retracement as well. It could be. It doesn't change character. Price wouldn't change character in this leg unless price got up to here, broke this, its last high. It has to close up above here. Then that could be a change of character situation.
Nice.
But for now, it's just doing pullback and deeper retracements. So, all right. So we've got that section, right? We've determined our entry. We've determined our stop loss. And this goes back to you, Fabrice, because you wanted to figure out like how to dial in.
Yep.
This is the important part, because while you're dialing in, you have to remain flexible. You can't be stiff in your analysis. You have to be fluid because the market is fluid. It's flexible, number one. And number two, it does what it wants. Just because you found a setup does not mean you're going to catch it. It does not mean you're right. It does not mean you're going to win. Everything in trading, I don't care what anybody tells you, even with my high win rate at 80 to 90%, I know for a fact, without a doubt, everything in trading is still 50-50. Because everything can line up. All of the apples can line up. Everything's marching in place. Everything is beautiful, and it still doesn't work out. Two things can happen. Either you miss your play or your stop loss gets hit.
Yeah, I'm gonna have to
and you have to be okay with that. Like if my stop loss gets hit, I'm like, well, shit, I was wrong. How many times my stop loss gets hit in the chat and I'm like, all right, don't worry about it. We'll find another play. Because I know we're going to find another play.
Look it up.
Yeah, you just got to wait for the setup. So let's see what happens here. All right, so we found where we want to place our stop loss. We found where we want to place our entry. What's the next thing we need to look for before we enter anything?
Areas to collect money.
The take profit levels. The take profit levels. So being as that this right here was the last low, I want to place a take profit there. And we're looking at a 1 to 3. I didn't know this was going to be a 1 to 3. First of all, guys, don't shoot me just because I'm the 1 to 3 king. But this is typically what happens. This is like the magic number in trading. This keeps your bills paid, your lights on, and your belly full.
Cash flow.
Cash flow. 1 to 3s, baby. You everything else is a cherry on top of the cake after 1 to 3s. I know from experience from all of the years that I've been trading.
Yep.
So let's see if this plays out. Let's see what happens. All right. Let me move this over here. And let's see if we get some action on this analysis. Boom, we're in.
Oh, yeah.
I'm out. We're done for the day, guys.
Go to the gym.
We're done. I'm going to the gym. I'm going to the gym. That's it.
Don't try to get it again. Don't try to be.
Oh, don't do that. Don't break my heart like that. After I tell you guys all the time, don't get back. You just won. Don't get back in. You're not the same person, man. You know what I mean? You just won. You got adrenaline going. You feel like you're that guy. Soon as you hit that button,
You lost already.
you lost. You lost already. This is a sweet setup in a market that we woke up in the morning and all the key levels were set. And we were like, let me slide it over a bit so you can see the tap. Not only did it tap, But what did it do?
It rejected hard off of it, like complete, like immediately.
Oh,
You
and
know,
listen,
it
it
was,
makes me excited, and I wasn't even in this.
and this is considered a scalp because this is 5 minutes,
This,
right? This is like a quick move.
yeah,
Yeah, in and out.
this is listen. This
That's 10
was
minutes.
this was waiting 10 minutes, then
Uh-huh.
winning 10 minutes. This is a 20-minute situation.
That's
All
crazy.
because you did the work. All because you did the work on the back end before anything. You had all your key levels set, and you had a situation where you could look for a setup instantly in the market. This is so important to understand and take in, guys, because if we weren't looking for anything, if we didn't have our key levels set, we wouldn't know what to do with this. We wouldn't know that price is consolidating because it found support. So if it breaks up, we're going to look for longs. If it breaks down, what are we looking for? Shorts. And so what did we look for? We looked for a short. Not only a short, but damn, that's a pretty short.
20 minutes
Actually
short.
came back. That's beautiful.
And that thing,
That's beautiful.
it's gone, boys. I'm off to the gym.
Yep.
That's why you never chase these O's.
That's right. You just don't.
You stupid.
You know what you really don't do? You don't worry much when you've already done all the work, because you know that your key levels are set. You're feeling good. You sat there and you peeked at it real quick before you went to bed. Make sure your levels are set. And a lot of the times, you can have a setup. You can have an analysis already set up for the morning. A lot of the times, so that when you wake up on 9:30, you'll see that price has already gotten into your area of interest, and you can actually take the play.
That's true too. I've noticed that.
That happens a lot, guys. That happens a lot. You can set your plays in Tokyo, and you can wake up in the morning to money. I don't know how many times. It hasn't happened a lot this year, but last year we were waking up to what I call sleeping bags a lot. Like I was setting the play at night. Well, sure, we woke up. Oh shit, not that. Oh, well, we ain't got nothing to do. See you guys tomorrow.
No, that happened 2 times this year.
It happened twice
for
this
sure
year.
Yeah, for sure.
It was
You
like,
set a level. I
Listen,
put it on. I put it on. I woke up to money. 3 o'clock in the morning.
straight up, bro. I love those, man. Those are the best gifts the market gods could give us. And the reason why we get gifted that is because we were prepared. We did the work. It's all about preparation. That's who gets paid out here, the preppers. This is prepping right here. And all of the simple stuff that I showed you earlier leads to this right here. This is such a great example of what I do on a daily basis.
Is there a way, and I'm not sure if you showed me this before, how do I see the London moving? Like there's times yeah, but in my chart doesn't show me that unless that's like a settings or something.
Oh, but what market?
Well, I do New York, but I do want to see.
No, I mean like what financial market? Are you talking about stocks? What are you talking about?
Okay, that's probably the difference. So
yeah.
The stocks they move around that time, don't they? Like the Teslas.
I don't trade stocks, but from what I understand, you can't do anything with stocks at night. From what I understand. Now you could do stuff with the indexes, but again,
indexes.
I don't trade individual stocks, so I don't know.
That's where I see a lot of gaps and stuff. So I thought I could see what you're seeing here, but that's because this trades all day. This is 24/7 in this case. This is gold. What we're looking at.
Yeah, this is gold.
Okay, so that's the reason why.
This is gold.
So I thought there was the settings to see it. That's all I was asking.
No, it's not even specific settings. Like even if you load up your trading view chart, if you look to the right, you'll see a clock. If that market's open, and if you don't see a clock, that's because that market's not open.
Okay.
Price right now. Let me see something. Let me see right here. See this clock right here?
Oh, okay.
right here. That's what tells you if the market is open. If the market's not open, you're just going to see price. But once the market opens, you see a clock turn on.
And the gaps, or it moves.
If it has a gap,
If I
it
had
doesn't. Yeah, it doesn't always have a gap. But if it has a gap, you'll see it move. If it has a gap, then it has a gap, and it may want to fill that gap and then go to its real direction, or it may continue without filling that gap and come back at a later date and time to fill in that gap. That's usually how that works.
Is this? I might have the answer, but I notice this happens to me a lot. When you wake up or when the market opens, you get either a huge, let's say, gap that you're in profits. How do you make good decisions based on, okay, it's in profits. How can I continue riding it? Or should I just collect this because now it was a big move. It's gonna reject from here, and then you lose all the profit you were looking at. And I'm talking about like an opening move, that type of thing.
All right,
It
that's
happens all the time. So what would you suggest besides key levels, which I think that's the obvious?
well, key levels is the first answer.
That's the first answer.
The real answer is that decision has to be made before you ever entered the trade.
There you go. That makes sense.
Your exit is predetermined. Before you ever enter a trade, you should know where you're going to exit at.
There you go.
Now, if price, let's say, is not at your exit yet, and you want to decide whether to close or not on that trade, then all it simply is a matter of looking at the price action and allowing it to tell you what it's doing. And the best way you can do that is looking for breaks of structure in your favor and looking for candlestick patterns in your favor. Because sometimes you don't even see breaks of structure in your favor. The price is just moving, like small little increments, but it's moving in your favor. If you see breaks of structure against your favor, then you have two decisions. Either exit your trade and profit, or just move to break even to protect yourself in case it wants to come all the way back and not give you your complete analysis. Like it doesn't want to complete your move. You get what I'm saying?
Yeah.
That's how you do it. That's a managing question. That's a question of managing your trades. When you guys hear me talk about, oh, I'm just managing trades today, all I'm doing is looking at price action. And I want to see it, like if I'm in shorts, right? If I'm in shorts and I get
right there,
I get a low, right? Price starts coming up.
It breaks.
I don't get nervous. I just watch it. Because let's say I'm in from all the way down here, right? And my exit isn't down till the weekly down here, right? I want to make sure that I also use my fib. I use my Fibonacci to manage trades as well, which is I don't know if everybody does it, but I for damn sure does it. I damn sure do it. I'll take my fib for my entry down to the low, right? Let's say this was my entry here, like it was. And I'll watch how far price wants to extend.
Respective 50%.
So like if I don't want to be watching the price action, I'll just watch what the leg is doing as a jet. I'll come back like every 30 minutes, every hour, or something like that. I won't continuously watch it because that may make you make a decision that you don't want to make just because you're getting faked out by price action. When really you just need to be looking at where in the overall aspect of the retracement is it going? Like how far back is it going? Like if it's at a 50 and it starts coming back in my favor, I'm good. If it's at the 618 and it starts rejecting and going back to my, going back in the direction of my favor, I'm good. If it passes the 618 and starts closing above the 618 and hitting up here, I move to break even or I take profit. Because I need something off that thing.
That's called like going against you at that point, right? That's like going against you. So do you resize? Yeah.
It's just a possibility that it is. It could just be going for a deeper extension, a deeper pullback, and then drop. That happens to me a lot too. Like, yo, if you pass my 618 on my move and I'm all the way down here, you're coming back all the way up here. Man, first off, I'm pissed. I'm like, dang. Don't think I don't get pissed. I get pissed because I'm like, dang, son of a gun, now I gotta wait longer. But that's what makes me take profit. Like if you start closing behind the 618 from this whole leg, then I'm like, I'm either gonna do one of two things. I'm either gonna take profit or I'm gonna move to break even and I'm gonna walk away. Because if I look at it anymore, it'll psych me out. Because it could be that it just wants to get to the 786. And look what's sitting up here in this case.
So how do you,
there's an order block sitting up here. Price could really just want to come all the way up here. If it passes the 618, which there's nothing here in market structure, there's nothing there. So it could just be filling up this imbalance right here and coming to this order block to go down. So your decision is based off of how much can you bear? How much can you take? And you can only take a lot when you've had a lot of experience. If you don't have much experience, trust me, you'll be closing here. Easily. You'll be closing here, you'll be closing here. Like, oh shit, she's coming back. Closing.
so how do you because this is, I think, one of my biggest weaknesses. How do you manage that little pocket right there to collect instead of like absorb these losses? Because at that moment, it's actually taking your money back that you think you're making. You
Well,
know,
it's not. It's you're leaving money on the table. You know what I'm saying?
yeah,
You're leaving money
to
on the
get
table.
it back, like hoping it was going to give it back to you. No, it's not going to.
Yeah, but yes, but also something is better than nothing.
Exactly.
It's better you take profit and readjust again. You get what I'm saying? Like, let's say you took profit here, right? You're like, oh fuck, I'm taking profit. I can't take it anymore. I'm scared. Perfectly fine. Take profit, right?
And that's where the next leg starts.
And that's when the next leg starts.
You're like, fuck, yo.
But now you have to get back into analysis mode, searching for a setup to get back in. But now two things are working against you. Number one, now you're chasing. All right, so you've got that energy, and we're like, damn, I want to get the rest of my profits. That's never a good way to begin an analysis. It's not good to do that. But we do it because we're greedy and we're traders. Let's be honest. Like we want it. We want the action. So the best thing you could do in those cases where you did take profit here and now you are in the mode of looking for trades, the best thing you could do is just sit back and wait. Sit back and wait to see what it does. Let's say this leg formed, right? Remember, the take profit is down here, your true take profit, right? And you came back to the chart and this leg formed. What do you think I'm going to do right there?
You put a fib above it.
I'm grabbing the fib. I'm grabbing the fib. I'm trying to figure out where can I get in at? I'm grabbing the fib. That's all I'm doing. Because if it formed, it gave me a high low, I'm going to grab my fib.
We don't know nothing.
And I don't know shit. But I do know something.
That's perfect.
But I do know a little something about a little something. You know what I mean? And I place my stop up here. Why? That's the last high. It's the last high. It is what it is. It is what it is. The market tells you where to put it.
True. That is the last high, but why not the 786? I'm just saying.
You can. You can. You can do that. You can put the last. You can put the last stop loss right here. I do that a lot too.
Okay.
But I'm gonna put it right here.
That's for safety.
For market structure, fundamentals, and key level basics. You never want to place your stop loss where there's a key level. Because why?
You don't want to test it and come to it.
Correct. Correct.
So that's going to take you out, and then do
So
the move.
instead of me being nervous because I'm already on it, I
Right.
already entered. I'm already looking for this trade, this second trade, out of my trading plan. I'm just being greedy now.
Mhm.
So in order for me to have the psychological fortitude to withstand my greed, I'm gonna keep myself safe.
Okay, but you can also put it above the 786 and leave a little room for it to breathe, so it could touch a key level.
You can put it anywhere after the 786 and
Yeah.
above, anywhere here.
Hmm.
But this is market structure. You're using market structure. You get what I'm saying? It's the fastest answer and it's the
Mhm.
safest
It
answer
is. It
at all
really is.
times.
It really is, though.
So
All right.
now,
Just wanted
where are we gonna place our stop, our take profit? Where our original take profit is nothing more, Carlos. Nothing more. Boom. And what do we have here? We have a perfect tap of the second leg up, not even drawdown. And it just fell down and we collected the rest of our profits. We were greedy bastards and we got paid for it.
And then what you do? You go to the gym.
And I'm off to the gym. I'm off to the gym. I probably
Don't
didn't go
get
to
back in right there.
But you see how these patterns keep emerging in the market. You don't have to chase this. You don't have to go in here. This is chicken scratch. I'm trying to teach you guys to go get the move of the day. Big dog shit, not Chihuahua shit. I'm trying to teach you how to get the big play. Now you can take this strategy and dial it down to lower time frames all day because I'm a swing trader by nature. That's what I do. I'm in these lower time frames because I can find daily plays while I'm waiting for my monthly swings to play out. I've taken a swing trading approach to day trading. That's why my moves are so clean. That's why my entries are so snipey. And that's why my plays are consistently 1 to 3s. They always pay. I don't know how to explain it any more than that. They just pay, man. I can't explain it. All I do is I follow the rules of the market, and I get action like this all the time. But there's a secret to it, and it's the hardest secret anybody. Well, some people adapt to it faster than others, but what do you guys think the secret of this is? And the answer is not discipline. Discipline is like second.
Patience.
Patience.
Oh, gosh, yo. Patience. Yo.
It's all about. Listen, first of all, I'll be honest with you guys. It took me years. It took
okay. That's first of all.
It took me years to get to this point because I was not patient at all. I wanted my money now. And so when I first got into trading, I used to do scalping. And then I realized I was a crackhead when I was scalping. And I didn't like who I was when I was scalping. I was like, no closed doors. Like, don't touch me. It was not fun for me. I was always stressed. I was always tripping. Then I found swing trading and I did that for a few years. And I got good at that. And then I was finding so many day trades within my swings that I wasn't taking. I realized I was leaving so much money on the table that it was stupid not to turn into a day trader as well. So I refined it. Got really good at just like pattern recognition. And that's why I'm the trader you see today. That's why you see the plays that I send you guys are so clean and they're so precise. And all you have to do with my plays is set them and wait. You can wait for a few hours. You can wait for 5 minutes. But all you got to do is just wait. And once you're in the play, you got to wait some more. And then take profit.
When I tell you.
And I hope you do when I tell you. Not everybody does it. Not everybody does it.
I never do it.
You've never done it. Carlos will take his stop loss like, oh, the stop loss behind the structure, nice and safe. I want it right here though. I want a stop loss right here. I want a 1 to 22 right now. Like, what? What do you mean you took an L? Everybody won. Nah, not me.
Not me, Papa. Not me, Papa.
But this was a good lesson. And right now, I just want to go over all questions. If you guys need me to go back to anything, you let me know right now. Everything is recorded. This is a good chunk that you take and you just practice this for like as long as you need to. And then in the chat or DM me privately, send me your TradingView charts and ask me if I think your key levels are placed properly. And then we could adjust. I'd be like, all right, this one, you don't ever need to place that one there again. You should move this one here. That one's perfect. Things like that. And then we'll go over that. Okay. But if you guys want to go over anything right now, we still got a few minutes left. So like we got 15 minutes left. So if you guys want to go over anything other than what we've already done, let me know. Even anything outside of what we've done. If you got a question about trading period, y'all let me know.
How about looking at like the two biggest, we look at SPY or NASDAQ now, and we kind of base it on key levels and see if you could find like a play or something like that.
Y'all want to find a play? Y'all want to find a play?
You want to find a play?
We find a play.
Get it.
We can analyze it at least, you know.
We find plays on the Tokyo Net protocol. We find plays.
All right, man.
We find plays. The reasons of their screen record.
I'm in there.
All right, let's see. Let's see if gold I wouldn't touch right now, mainly because gold is at a level of support. Yes, this is a bearish trend, but you guys can't see it on this because this isn't my main chart, which I'll show you guys over here. Show you guys my main chart. This is my main chart on gold. We're in the buy zone on gold. So there's nothing to short here. The only thing I'm waiting for, I was going to tell you guys in the morning too, we're preparing to go long on gold for like the remainder of the next month or two. Because this thing is about to like, as long as it stays within this buy zone right here and starts moving up, we are only looking for longs on gold. Attention, we are only looking for longs on gold. After this sets up here, breaks a few trend lines and starts going up, I'm only sending longs on gold, just so you guys know. Prepare those accounts. Prepare the accounts. All right, so let me save this here. Let's see. Let me look for my other windows. Okay. Okay, so let's see NQ. NQ. Let's see what.
Look at the order block.
That would have blocked down here. I got long play. Like we are so far away from this, but look how far ahead in the future I set plays.
Yeah.
Like we're nowhere. We're all the way up here. Okay. It's gonna be a while if the market comes.
The world has to end.
If the market comes, I got a little note right there that looks like red and blue that we want a long on that. But let's look at the market for what it is right now. Let's go to the 4. Let me get rid of this stuff over here.
What you doing?
Check into. That's fine. All right.
So we had a support right now.
We're basically at support right now. So let's do what we just went over, guys. All right. Let's go to the line chart, ladies and gentlemen. Set our 4-hour key levels. See if we find anything. Where's our time here, guys? We got a low right here. Ooh, we got action right there. What is that? I'm gonna be going through this quick, but I'm gonna be going through it.
Oh, clean.
I don't know nothing. I'll tell you guys all the time. If you ask me about trading, I don't know. Why you asking me? Ask the chart. The chart's got all the answers, guys. All right. Boom, that's the 4-hour. Let's go to the 1.
Start from the top, right?
Huh?
Start from the top.
I started at the 4-hour.
Okay. No, I'm saying on the top. Even if it's 1 hour, you start from the top to
Oh,
mark levels. No?
yeah. Well,
no, your eye is able to see it quicker.
yeah, I'm just looking at from number one. I just seen things a lot more quicker than the normal. I'm just processing so we can get to the setup stage first.
Yeah, last time I hit there, that thing flew.
That thing went papaya.
Oh.
Y'all see how I move quickly and just toggle back and forth. You guys are watching me what I'm like at 8 in the morning. I'm not setting key levels, but I'm adjusting things. I'm adjusting a lot of things here. I'll even set those key levels are fine for now. Let me see if we can set a trend line here too.
Yeah. This bearish trend touched
We got
a few times already.
That one's good just to keep there, because if it does break this trend line, she's gone.
She don't like nobody after that.
Nope, she's nobody's friend. Okay, let's see. It's already in play.
Yeah, but
Another thing that'll happen to you guys too, which is a great example right now, is that the market would already be in play, right? If we got here, what is 1300 hours military time in
1 o'clock.
1 o'clock.
Yeah, 1.
1 o'clock?
Yeah, 1.
Okay, so at 1 o'clock today, if we would have had this play, I was not looking at any of this at 1 o'clock. I was at the office looking at the apocalypse of a flood. This is already in play. So let's look at the 15-minute. Yeah, so we've got if this candle in 5 minutes closes bullish up here somewhere, then we've got a head and shoulders, and this is going to continue up. So there's nothing we can do here, right? There's nothing to do here right now. And that's okay. Leave your analysis in place, right? So when you come back to it and another leg has formed, you could sit there and take another fib from the low to the high and possibly catch
Let it come to you.
an entry here, waiting for it to come back, then take that up.
and it breaks the trend, which is going to leave.
And that's a great one to hold on to, by the way. So there's nothing to do here. We can't trade this because it's already in play. Like if you want to start digging into that at this time, 10 o'clock, I wouldn't recommend it. But it's better to just let that breathe and come back to it in the morning and see what happened and go from there. So NASDAQ doesn't have anything. Let's go to the Dow. That's the daily. So we've got low, high, higher low, high, higher low, higher high, breakdown. Now it's shorting, right? This is most likely a 618 area, but I'll map it out so you guys can see what I'm looking at. Yep, 618. Boom. Heading down. Unfortunately, this play is also already in motion. So all you could do is just leave your pre-analysis in play. Like you can leave your fib in place and see if it continues down and then look for a play in the morning. So I'm most likely thinking MES is doing the same thing. ES is doing the same thing as the NASDAQ. Yeah. I definitely wouldn't touch MES with a stick right now.
I know them all.
We'll know tomorrow. Hopefully it moves out of this. Because this is all it's been doing. It's just been right here.
No, it's the middle of the mall, like you told us before.
That's the middle of the mall.
Yeah.
You don't find nothing but the cheap stuff in the middle of the mall. And it always breaks. So there's no setup. Let me place a
that trend line too.
yeah, let me place a trend line here. This is good.
Multiple touches.
This is better.
Oh.
That's trend line right there. Unfortunately, there's no setup, but that's okay because there's 9:30 in the morning, and there should be a setup then. There should be a setup then.
It's at support right now.
Right now, it's at support, and it's exhausted at support too, as you can notice by all of these wicks.
Wicks.
Just popping down. She's not moving anywhere yet. This is one of those situations where you don't do anything. It's better to stay cash than to risk something on basically nothing. This isn't worth my time. And if it isn't worth my time, it's definitely not worth your time. Like I only look at Primo or like Wagyu. Sometimes I'll do churrasco at the food truck, but I only want Wagyu at the at the restaurants. But that's basically it for today's lesson, guys.
Do we got any news this week?
Good
Tomorrow's
question.
NVIDIA.
Let me see.
NVIDIA tomorrow.
NVIDIA earnings tomorrow or tonight?
Tomorrow at 4, I think it is. After hours. So expect a big move.
Tomorrow after hours?
Yeah, after hours, NVIDIA. NVIDIA controls the market.
Yeah, yes, it does.
Yeah.
Let me see. Today is the 19th, so tomorrow will be the 20th. Oh, we got FOMC minutes. Yeah. I mean, it's high.
What time is that?
That's in 16 hours from now.
So that's like 2 o'clock, I'm thinking.
Yeah, right around there afternoon time.
Yeah. So that, NVIDIA, I think Home Depot's tomorrow too.
Oh, this balance of trade from Japan is interesting too. That one, that's in 21 hours. We don't got to worry about that. That one's going to happen during the Tokyo session while we're in class. Tomorrow's class too.
Okay.
What do you guys have a topic you want to discuss tomorrow or something you want to go over tomorrow along with the lesson I'm going to pick? Anybody? Anyone?
I would like the beginning of this lesson, if possible. You're gonna send this today, maybe this recording.
This is gonna get recorded, and then I'm gonna upload it to YouTube. You can access the last two classes on YouTube as well.
Okay, you'll send this
Awesome.
one tomorrow or today. I would like to have this one.
Yeah, no,
before.
it's gonna be uploaded today.
Okay, all right.
Yeah, it'll be accessible for everybody.
You send it to the chat, right?
Yeah, I'm gonna send the YouTube link to the chat so you guys have it.
Okay.
Oh,
Perfect.
hold on, let me see what Semi say. Understood chart markup, but I'm not familiar with the Fib tool and how you know exactly where to place it. The Fibonacci is an extremely important tool, Semi, and we will have its own class for it tomorrow. Since you brought that up, you might want to log in because we're gonna go over where to place it, how to place it, why it's placed the way that I place it. All right, perfect, great.
Break the structure, change the characters. Those are all like good things that I think I have issues. When to take profit, which I think we did a little bit of it today.
That's a market structure class in itself, but it ties into Fibonacci. So I can blend both of those together. That'll be a great class.
Okay.
Thank you, Sammy. It was definitely it's always good to teach you guys this because yes, I know my stuff, but every time I teach, I get better. It never fails. Every time I teach, I'm like, damn, I should have done that yesterday too on my own trading because you forget steps. And sometimes you forget to look at things the way you used to as a student. And now being the teacher and running all the other stuff that I do, sometimes I forget about the smallest detail that makes the biggest difference. So these classes are just as good for me as they are for you guys. So the more you guys pay attention and participate and ask all the questions you possibly can, the better it is for everybody in the room. So it's good shit. Dynamite, some shit like that.
Dynamite.
All right, it's 10. Yeah, we did a whole 2 hours. Well, an hour and a half, but we started at 8:30. But this is good. This is a great lesson, small lesson. We're going to be doing them in chunks like this. Not every Tuesday will be market structure, key levels, but it's going to be based around key levels on Tuesdays. So until you guys get better, until you guys are like, all right, we've had enough key levels. I'm a pro. Let's move on to something else. Then I'll move on to something else. But I'll keep doing it and drilling it until you guys get it. Because I know on the next key level lesson, there'll be something you forgot about the first key level lesson. That's just the way it is. But also, it's recorded and it's getting on YouTube tonight. So I'll send you guys the link.
Perfect. Vince Lombardi.
All right, guys. Thank you all for coming. And I'm out. I might go to the gym. What time is it? Oh, no, I'm not. I'm not doing that. I'm not doing that.
I'm down though.
Yo, you are far. I'm not going over. No, sir. My gym right here, 3 blocks away.
You don't go to USC no more?
Nah, I go right here. It's so close.
Yeah.
It's so close that I feel stupid not going. UFC gave me a reason not to go because it was so far. That was the fat boy in me. So I was like, I'm not gonna do that.
Yeah, I told her. All right, cool.
Yeah, so we're good to go here. And that's it for this recording.